Morning, Steve Free in Chicago with the morning grain comments. Markets are mixed with soybeans right now up about a penny, which is about 4 cents off the overnight highs. We've got oil a little bit lower, meal a little bit higher. Corn's down a full 5 cents. Right now, 8 cents off the overnight highs. Chicago wheat's up a penny. Kansas City's up 2. Minneapolis is up 6 cents. Stock market's a little bit lower. The dollar's a little bit lower. And crude's a little bit lower. When we look at some of the market fundamentals overnight, I think the main thing that the market is looking at right now is that the temperatures in Kansas over the weekend were colder than expected. Some locations around Salina saw temperatures as low as 22 degrees. So it's going to take a few days to assess if there was any damage to the wheat and how much. Again, some people are talking about the wheat growing point may have been above the ground, which definitely increases the chances of some damage. The market was already concerned about lower HRW production because of the dryness. We've seen prices trend lower because of a rain event, but the concern is that at the end of the day, that there might be some lower production numbers despite this rain event. And some of the maps are taking the 1 to 3 inch amounts out and putting in maybe a half to an inch amount rains instead. The rest of the Midwest is cold and wet, which could delay some of the corn plantings. We expect corn to be about 24% planted right now, and beans about 18% planted. We'll also be watching the outside markets. We're still trying to figure out how much the Fed's going to increase U.S. interest rates and the impact that has on the economy. We're kind of seeing some indications of a slower global economy, even a slowdown in some of the Chinese data. We're also looking at big South American soybean crop, reducing U.S. soybean export demand and lowering soybean prices. We're also looking at the possibility of some kind of conflict on the Ukraine export corridor deal. The Russians want back in the SWIFT program, and also sanctions dropped to the banks that finance exports, and the UN suggests that maybe we should consider that. Whereas the G7 was meeting and talked about export ban of Russian exports, and the Russians were quick to respond that if that happens, it definitely would end the export corridor deal with Ukraine. The Ukraine war continues, and we're still seeing some concern about logistics from an export standpoint there, and we'll be trying to figure out long term the impact that has. Long term, I think that more acres in the Black Sea, more acres in Brazil, could reduce the amount of exports leaving the U.S. So when we look at some of the private estimates of 23-24 corn carryouts, a little bit over 2 billion bushels, assuming more acres and a higher yield. The bean carryout around 360, again assuming a higher yield, and the wheat carryout around 650 with normal crop.